This last example from chapter 14, we're going to look at direct labor and direct materials variances for this production company. So we have information on the standard input, standard costs for direct materials and direct labor. We also have some information on the actual labor and costs for our information, and we're going to look at the efficiency and rate variances. So what we want to calculate here, first we need to look at this as a process costing example. So we need to calculate how many units we have completed for direct materials and direct labor as part of process costing, so we can know how many total units of output we have. So we have 100% for direct materials, so 800 for direct materials, and we're 75% for direct labor. So our total number of units for direct labor and direct materials for direct labor, we have 5,600 plus 600 partially, and for direct materials, we have 5,600 plus 800. So this will help us in our calculations on our efficiency and rate variances. So first, let's look at our direct labor rate variance. So our direct labor rate variance, when we're looking at variances, is our actual price minus our standard price and our actual quantity. So one of the first things that we have to do is figure out what we actually paid for direct labor hours. So we see that our standard cost is $18.20. So we had total cost of $6,000 and actual labor hours of 36,500 hours. So we take that actual labor cost divided by our actual number of laborers, and that gives us how much we paid per direct labor hour. So our standard rate is $18.20. Our actual rate was $16.44. So we take our actual hours times the difference between our standard rate and our actual rate. So for our rate variance, we're going to take our actual hours, 36,500 hours, times the difference between our standard rate of $18.20 and our actual rate of $16.44. So our total direct labor variance is $64,300. That is a favorable variance. We paid less per hour than we were going to. The next thing that we need to look at is what is our direct labor efficiency variance. So the direct labor efficiency variance is the difference between the actual hours we used and the quantity of hours we budgeted for the production. So what we have is that we had direct materials unit or direct labor units of 6,200. We have a standard input of 6 hours per unit. So our direct labor standard hours, or our budgeted direct labor hours, would be the 6,200 times $6 per unit. So our actual labor hours were 36,500. Our budgeted labor hours for the level of production were 37,200 hours. So our efficiency variance is our standard cost times the difference between our budgeted hours and our actual hours. That variance is $12,740. That is a favorable variance because we used less hours for production than we budgeted. So that is part A and B. The next thing that we have are the materials variances. So what it tells us is the materials usage variance and the total materials variance. So instead of giving us the quantity, it wants us to calculate the quantity based on the variance. So we already have the variance. Now we need to back into the quantity information. So we need to figure out a couple of things. One is how much is our standard quantity of materials, and then how much was our actual usage of material. So we have our standard input is 8 per unit. So for direct materials, our budgeted direct materials are 8, or our standard of 8 per unit, times the number of units for direct materials, 6,400. So our budgeted direct materials was 51,200. We know that we have an unfavorable usage variance. So we used more than we budgeted, but we aren't given any information other than that materials usage variance about how much we were over. So we want to know how many kilograms of material we actually used. So because that is based on our standard cost, we will take our unfavorable variance divided by our standard cost. So we have our unfavorable variance of $1,500 and our standard cost for direct materials is $5 per material. So our overage is $1,500 divided by $5. So we went over 300 units. So our actual usage is our budgeted usage plus the 300 overage. So we actually used 51,500 kilograms. If we want to know then what our total variance is, so what's our total variance we're looking for, we want to know what our price variance is. So we need our materials price variance in order to calculate that out. We've been given our total variance of $750 and our materials usage variance of $1,500. Well, what we know is the total materials variance equals our price variance plus our usage variance. So we need to separate those out. So if our price variance plus our materials variance equals $750, then our price variance is the difference between those two. So 1,500 minus 750. We also know because our total variance is less than our usage variance, that is a favorable variance. So when we add them together, we get an unfavorable total $750 variance. So we purchased 50,000 kilograms of materials. Our standard rate is $5. So what we paid per kilogram is based on this material's price variance. So that amount, we have our $5 standards minus the number of pounds we purchased, which was 50,000, divided by, or actually it's our price variance of 750 divided by the number of pounds we used, 50,000 that we purchased. So what we actually paid for direct materials is $4.98. E says, what is the total amount of material and labor costs transferred to the finished goods account rounded to the nearest dollar? So when we're looking at the number of units, we want to know what the total paid here, total standard cost, and the total number of units. So we're talking about finished goods. So in a standard costing system, we record our inventory at the standard cost, and we keep the variances in separate accounts. So if we completed and transferred out 5,600 units, it would be 5,600 units at our standard cost of direct materials and labor. So the amount that would go into the finished goods based on direct materials and labor would be 5,600 units times our standard cost for direct materials plus our standard cost for direct labor. And F then asks the total amount of material and labor cost and the ending balance of work in process. Again, that would be the equivalent units. We have 800 for direct materials and 600 for direct labor, and they would be times their standard cost. In the standard costing system, we record everything at standard cost and not actual cost. We record variances for the actual cost difference.